Hey now, I'm back with another trading system review. In this installment of Trader's Landing, I am going to review this system from the online trading signals channel that boasts an 85% accuracy on the 1 minute chart. How perfect is this strategy? How amazing is this system? Is what I am about to show you that incredible? Just how brilliant is this approach? And is Mark really going to be a millionaire? I am going to answer all of those questions and provide you with my 5 optimization tips to make this trading system even better. And if you want to see more content like this, just crush that subscribe button better than this lady kicks butt. I call this system the Gossamer Scalp, and like most trading systems, it can be applied to Forex, crypto, options, stocks, indices, or any instrument that has significant volume and market participants. This trading strategy uses just one free TradingView indicator. As always, the link and settings to the indicator is listed in the description below. This system utilizes the Heikin-Achi RSI oscillator. Per the creator settings, the open smoothing will be set to 7 in an attempt to diminish market noise and provide more valid signals. In addition, I am going to remove the histogram and increase the opacity of the oversold and overbought section to 25% so you can see it more clearly. This study uses the Heikin-Achi as a histogram with the RSI laid over, similar to how the MACD appears. The Heikin-Achi RSI oscillator will be used to provide triggers and provide trade exits. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Shiba Inu versus the US dollar 1 minute candles. The rules to enter along on the Gossamer Scalp are: first, the body of the red Heikin-Achi candle must close in the oversold zone, which is the green shaded area. Please note that this is a change from the original system that only requires a touch of the green shaded area. I changed it to the close of the body to filter out false signals. Second, the buy is placed when the first green Heikin-Achi candle closes. All of that happens on this candle here. That is our trigger candle. The original creator did not specify a stop loss, so for this test, I will be placing the stop below the previous swing low. And we exit the position when the first red Heikin-Achi candle closes while touching the RSI and the trade is in profit. And this setup yields a 2.15 risk to reward ratio. If you enjoy this content, make sure to click that like button. I have one more long example. First, a red Heikin-Achi candle closes in the oversold zone. Next, there is a close of a green Heikin-Achi candle on the indicator. Both rules converge on this candle and it serves as our trigger. The stop is placed below the previous swing low and the target is dynamic. And this setup closes on the close of a red Heikin-Achi candle while touching the RSI, and the risk to reward winds up being 1 to 2. Now we flip to shorts. This is what I will test for shorts. First, a green Heikin-Achi candle closes in the red overbought zone on the indicator. Next, we are looking for the first red Heikin-Achi candle to close. All of that happens on this candle here. That is our trigger candle. The stop is placed above the previous swing high and the target is dynamic. And this position is closed on the first green Heikin-Achi candle while touching the RSI. I'm going to show you one more quick short example. A green Heikin-Achi candle touches the overbought zone. A red Heikin-Achi candle closes. This is our trigger candle. The stop is placed above the previous swing high and the target is to be determined. And this trade is closed when the first green Heikin-Achi candle touches the RSI for a 1 to 1.6 risk to reward. I'm going to give you some intriguing ideas on how we can make this system better along with a Trader's Landing score. And now it's time to do what I do. If you enjoy this content, please hit the like button. Remember, this is just 100 tests on one instrument. If you are thinking of using this system, please do all the required testing and be sure to let our community know what you discover. This test was done on Shiba Inu versus the US dollar 1 minute Japanese candlesticks. It took 4 days to find the 100 setups. Most wins and losses in a row equal each other at 7. This system had a winning rate of just over 1/3 and a profit factor of 1/2. The total gain on account, taking all the setups, would have been a negative 32%, which would be made worse by fees. But there are some extremely important lessons we can learn from this strategy, other than that the system does not have anything close to an 85% win rate. So the equity curve here would be fabulous if we could just reverse it, but we cannot. Typically, I give some perspective on this, and here it is. What score would you give this strategy? Let me know in the comments below. For the first time, I am going to give a system a Trader's Landing score of 0. Because if this system is so brilliant, amazing, perfect, incredible, and turning people into millionaires, they must be taking the other side of each trade. Remember, the enemy of great is good, but in this case, the enemy of awful is knowledge. I have 5 key lessons you can take away from this dumpster fire. First, this thing does not catch large moves. Look at this setup that gets you in here, but out here, and you miss this entire move up. And the same thing on this short setup. The use of this indicator to exit on a dynamic basis is even a worse idea than chasing after this kid. Second, if you are going to use a dynamic take-profit system, it must provide the appropriate gains. The average risk versus reward for this system, removing all losing trades, was an abysmal 0.89. Instead of using this ridiculous method to get out of the position, you could use something like the super trend, which I featured in this video. Look here where we can see the exit points using this goofy method versus exiting on a super trend sell signal. Third, and this is key for any system, you must know when to deploy your trading strategy and when not to. That is the difference between bots and a successful trader. Look at these 3 losing buy setups during a clear downtrend. Why would anybody take these positions? Generally, these will be filtered out by a trend filter like the 200 EMA or some common sense. Then we come to the part of why is this? Why is the exit when the opposite Heikinatchi colored candle touches the RSI? There were so many setups like this one when you wait for the retrace to the RSI, it gets you out in a worse position than if you didn't. Next, I came up with this in literally 1 minute looking at this indicator, but using the 200 EMA and the 50 EMA along with the Heikinatchi candles for triggers, you could have a very profitable system. I don't know about an 85% win rate, but I guarantee it will be more profitable than that brilliant strategy. Check out this playlist for more profitable systems and have a great day because you deserve it.